Good morning. I hope everyone's doing well. I'm excited to say that I'm going to go golfing today for the first time. Fortunately, the Thief River Falls Golf Course opened on Monday. Today is Wednesday for those who watch this at a later date. And I'm sure for those who live in a more southern region that are going to watch or listen to this conversation, they are not that excited because they've probably been able to golf for a while now. But for those of you who are going to listen to this via podcast, I recommend checking out the video because I'm going to be talking about perspective. And the perspective when it comes to not only life but also the stock market. All right, I'm a firm believer that our perspective becomes our reality, and it's really what convinces us to think and feel a certain way. But it's important to keep perspective in a big picture perspective when it comes to your future financial planning. All right, so today I'm gonna share my screen here, and we're gonna talk about the perspective of the Dow Jones Industrial Average. All right, so hopefully you can see my screen now. I'm not just talking to myself. If we look at the one-day performance of the Dow Jones, we're currently up about a little over 2%. Now, if I refresh my page, that might even change. It does, right? 2.2 went from 2.07 2.2, and that just goes to show how quickly the Dow Jones Industrial Average can change. All right, so I'm going to zoom in here, make it easier for anyone watching on their phones. Oh, maybe I won't. My computer doesn't want to work for me. Here we go. All right, so one day looks great, and this is what this is what the news, especially the financial market news, loves to sell. Whether it's green or red, up or down, they love to sell the one-day performances of the market because it's something easy to talk about. And where does their money come from? Marketing, right? So they try to act like this one-day performance is going to have this huge impact on your life, but in reality is what happens today from a financial perspective really going to determine the financial future of your entire life? Probably not, right? But they'll try to sell it to you that way. So let's look at a little bit bigger view. 5 days. Looks good, right? Mostly green, mostly up. We're doing well. All right, how about 1 month? Wow, you can't even tell we're in the COVID-19 chaos. We're pretty much up for the month. 1 month ago, we were at about 22,327, and now we're at 24,625. That looks good. Pretty awesome, right? In the 1 month perspective, life is great. Now let's look at 6 months. Oh, crap. That's where the red comes into play, right? All of a sudden, we look at, 6 months ago, we were at 27,000. We got all the way up to, I don't know where the high is exactly, but about 29,000, a little over. And then we dropped to 18,591. And now we're back up to about 24,633. Right? Look pretty volatile. Not exactly the best thing to look at, but not the end of the world. How about if we look at year to date? That's a little harder. That's a little more harsh because we don't get any of the fun from 2019. It's just January and on. If we look at the 1 year, that looks a little more stressful, doesn't it? It's like awesome, 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 fall off a cliff. As we know, that's when the government decided to shut down our economy because of the COVID-19 chaos. But if we look at 5 years, 5 years, it's like, oh, great. We're pretty much up the whole time. But as we can tell, it's not consistent. It's up and down, up and down, up and down, up and down, up and down. And there's a couple of cliffs in there, right? So back in the beginning, at the end of 2018, beginning of 2019, there's a little bit of a cliff, bit of a cliff here, bit of a cliff there. If we look at the max, that is from the beginning. The first one here is from May 2nd, 1980. The Dow Jones Industrial Average is worth $810. If we fast forward, obviously there's ups and downs. So if you look at that, if this was a linear line, it's primarily up, but in reality, it goes up and down. So, I'm pretty sure none of us have been living since 1980, at least unless I have some viewers who are really pushing the limits for the oldest people alive. All right, so going back to my point, perspective. All right, we have to understand that what's happened today, what happened yesterday, isn't going to determine what happens in the future, but it's something we can learn from. So whether you're looking at the max outcome of the Dow Jones Industrial Average, the 5 year, the 1 year, or the 1 day, we have to understand that the market does what it does. It goes up some days, it goes down some days, other days, and historically speaking, overall, it should be up, generally speaking, right? So from the max, it started down here and it got up here eventually. But from a 1 day, 1 year, 1 month perspective, it can go down. And we have to understand that because this COVID-19 chaos isn't going to be the last time that isn't going to be the last event that forces the market to go down. Now, I can't guarantee that, but it's more than likely there will be corrections in the future. So what we have to understand is that using the market for our financial planning isn't a bad thing, but should it be the only tool we use? All right, when you're thinking of, especially if you're nearing retirement, or if you just don't really like risk, or if you just don't like knowing that your financial life is completely out of your control because we don't control the markets, maybe it's time, or would it be valuable to have wealth growing and protected in a way that won't cost you money the next time the market corrects? Would it be valuable to have wealth growing and protected in a way that you don't have to be stressed out about the stock market going up and down like this when you're in retirement? Because how is that going to affect how you distribute and take income? Would it be valuable to plan in such a way that the money you have invested in the market could be used more efficiently with the understanding that market corrections do happen by having alternative sources of wealth and income? All right. So would it be valuable to have the feeling that not all of your eggs are in the stock market basket? All right. So those are only answers you can ask for yourself, but just keep in mind perspective. All right. Whether it's the market or anything else, perspective matters. And it's important to learn from the past when it comes to planning for the future, but don't just guarantee, or don't guarantee what will happen in the future because of what's happened in the past. Hopefully I said that as clearly as I wanted to. Thanks again for joining me today in my Money Not Math conversation. My goal is always to provide value for you because I love our country, but I believe our government's terrible at managing money and should not control our financial future. I believe we should take control of our financial future as much as possible rather than leaving it in the hands of the government or the stock market. So please, thank you for taking the time to join me in this conversation. Please let me know what you think by reaching out, commenting, liking, or sharing my content. I always appreciate it, and I hope you have a great rest of your day. Thanks, and bye.